Check out the video description for details. It's Thursday, August 3rd. Here's what we got coming up for you today. We're talking Square, Tesla, Take-Two, Activision, and we're going to go over our current portfolio and how it's performing. All this week, we're going to be focusing on earnings, and we had some more earnings reports yesterday. Square is someone that we've looked at, we've talked about on the show as an interesting spec play, kind of a long shot one. They had reportings that it started out pretty good in the stock popped. I'll bring them up here. They're down 4% today. It might be a good opportunity to get into them. Definitely if they get closer to $23 is a good place to buy in. But if you look at the articles, you can even see people reported a little too soon that the stock soared and was up, and they pulled the trigger a little bit too early, as it's slid down after the reports. Good earnings reports, and the problem with Square is it's already run up 150 something percent. Let me pull over the statistics. Yeah, 153%. It's already run up for the year, so it's run up quite a bit, and may have just missed out on this one, but it's still one to take a look at, as they target small businesses, and if you see tax breaks and stuff like that come from the administration, they would be a very attractive stock that could benefit from that. So we'll keep an eye on Square. They beat expectations and their stock is down, and it's kind of a strange one to see. A lot of good traction from Square, but like I said, part of it is just them. They already ran up a ton this year, but let's talk about a very oddball one. Tesla stock, I don't particularly care for. I don't like Tesla stock, and it is up 7% today. The stock keeps going up. I don't know what's going to stop this stock. I think it's like a scam, and I think there's a bubble there that's going to pop, and Elon Musk doesn't deliver. But on the conference call, it sounds like he may actually start delivering, and there was good news there, and that was enough to send their stock up almost 7%. People are still jumping on board this company that's losing money, and they're betting big and long on Tesla, and it has run up like crazy, and it continues to run up. I don't understand why. They had a record loss in the quarter. So you report a record loss, and they've just been bleeding money, and the stock goes up because they say that they're finally going to start delivering. And here's the thing, their money is made. $455 million they got from 455,000 people that paid $1,000 to reserve their car that's not going to deliver till 2018. That is a terrible way of doing business. That screams Ponzi scheme to me. But it looks like they could finally start delivering on these models and actually ramping up production. So people are giving them a pass on their quarter on the loss. I would stay away from Tesla, but lots of people have made money off of it. So if you have a high risk appetite, go ahead and get in on Tesla. I don't understand it. I think it's crazy to invest in it. I've missed out on a lot of other stocks that I felt that way about, but I'll stick with the conservative investing. Take-Two is one where we've said if they paid a dividend, I would invest in them tomorrow. They don't pay a dividend. They take all that money and they use it to grow a company. They had earnings yesterday and they revised their outlook, and they are screaming today, up 12%. They are getting to perfect the in-game digital transactions to make money off of with Grand Theft Auto 5. I personally think Activision's the best at it, but Take-Two is certainly doing well, as you can see, up 13%. I've done a story in the past where they really remind me of a younger Activision, and Activision's had a heck of a run up. I still like Activision stock. We'll talk about that in a bit. But they raised their outlook. Take Two did. They had uh, great earnings, and they don't even have Red Dead Redemption 2 to help boost that. That's coming out this year. So really surprised everyone, and they rose their outlook. So huge surprise, and when that happens, you get the big push in stock. Um, to gamers, it shouldn't have been a big surprise because of how popular Grand Theft Auto 5 is and some of the other platforms that they have, but it took Wall Street by surprise, and there was a lot of money to be made. And so this is the perfect example of why um, I want gamers to get into investing, because they saw this coming before people on Wall Street, and it was a 13% bump. You could have made a lot of money with Take Two, certainly. I'll put all the earnings links and stuff like that in the video description as always, so look for them there. And today, Activision is going to be doing their earnings after call, and I'll probably dedicate tomorrow's show to their earnings and really dive in. They usually give a pretty good, thorough presentation in their conference call to go through. Really easy to follow, and so it'll be it's a good one to look over. So probably tomorrow's show is going to be dedicated to that, so I don't want to talk too much about them, but they're already up today about 3%, and that's probably due to Take Two. Their bump there, people are going to be expecting something similar from Activision. Maybe not quite the huge revenue increase in outlook, because Infinite Warfare was softly received. Let's put it to you that way. But they have a lot of other good stuff with Overwatch League and things like that. So after the bell, Activision is going to be announcing their earnings. So we'll go over that tomorrow. I'm not expecting a movement like Take Two, but if they had a huge surprise, I don't know where they would get the money from. It'd be interesting to see, certainly. I don't think they have that Grand Theft Auto 5 out there that keeps getting these resurgences where people pay the money. Infinite Warfare just didn't do it. Their other games, the Blizzard titles, are all solid, Hearthstone, stuff like that. So I think they've pretty much accounted for what they're going to boost. So I expect them to be in line and slowly keep growing up until they get their next big hit wave, which could very well be Call of Duty World War II. We'll see how many lax Call of Duty people jump back in to the boots on the ground. It'll be very interesting. Lots of hype around that. That's one of the reasons why I like Activision. So look for them probably in a couple of quarters to have another big run. Not so much today, I'm expecting, but could be wrong. We'll see. They might do a Take Two interactive surprise. So let's talk real quick about our portfolio and how it's performing. You can see those are the stocks behind me that we own. They're in the ticker below. This is my kids' portfolio, their college fund. I put $100 or more each month. I buy up stocks for them to show you don't need a lot of money to grow a decent portfolio and pick stocks every month. And I'll show you how it's performing. It's up 5%. We want to see that north of 7%, but 5% is okay. Done a lot better in the past. Recent picks have all been performing well. Sega is up 7%. I think they're going to run big time, but it's going to be over the next year. Surprised they're up so much early. Square Enix was up as much as 9%, but want to see them run. Hasbro was up 9 or 12%. They slipped up. Maybe an opportunity to buy Hasbro. So some good solid picks recently now. Seagate is our overall big laggard. Down 19%. I don't know if I'm going to buy up more of them this month, or I'm really looking at maybe Collector's Universe on their dip. They have these periodic dips. Qualcomm, I'm not buying more of them until they settle what Apple's doing. They've gotten close to being sold because of their bumbling of what they've done. It was supposed to be baked into the price, all the Apple nonsense. It wasn't. So Not happy with Qualcomm. We'll see how that goes out, but I think I'm going to add to my portfolio instead of adding to one of the current positions instead of buying new ones. But um, those are my targets. I don't like any of them other buying in right now. Maybe Collector's Universe or Activision. If Activision goes down today, I might buy some of it tomorrow. And certainly on a pullback, I want to get some more Activision. AT&T is a possibility. Collector's Universe, I think though is probably who I'm going to buy into. And Seagate, they're going to be down for a while, so not in a hurry to buy up more of them. Although long term, I think it's great to be able to buy in at a 19% discount. So who knows? I'll make my decision soon. Buy up some more stock. Buy up a little bit this month for the kids' portfolio. Let me know what you think of who I should buy into, or should I buy a new stock from our shopping list. Our shopping list, we've gone over that before. Capcom, lots of them on there that I've missed out on. Tencent is one. So let me know what you think of possible buys for this month. I'll review them, check them over. Always appreciate your feedback. But that's it for today's show. Thanks for watching. Give us a thumbs up if you enjoyed it. Appreciate the feedback. Trying to grow the channel. So any feedback I appreciate. Go ahead and leave your comments, stock tips, anything like that. Game reviews, things. Interested to hear it, especially on the topics covered in the video. I'll always check them out there. So subscribe if you haven't already so you get the latest investing news for gamers. That's it. We will see you tomorrow.